All right, I just got off a session with a student, and I wanted to show you something. He lost something like 5 times in the same way on different charts. This is what kills people, right? That they don't understand that the market moves in cycles. It's up and down. Just because it's bearish all out doesn't mean there's not going to be bullish moments. And the habits that we create will ultimately lead to either profit or blown accounts. So let's look at this here on GJ. This is one of the plays, right? Remember, I'm bearish, right? So we did this. So far, this is us. Now, last week, he did this and won. He did this and won. He did this and lost. He did this and won, right? There's enough space there for him to win, all right? I want to make that clear. He won on 3 of those buys out of 4 of them. He actually won the trades. Where I ended up selling, he won. So what he was doing was he's knowledgeable enough to know where to do that from. The thing is that eventually the bad management is what's going to kill him. So he did things like the buyer Fibonacci, right? Nice strong price, takes the buy, wins. It's all good. And as the market develops the sell side, it's my turn, right? And I sell. Now you know this already, but the problem is that you can't go, oh man, why does that always happen to me? Why is it that when I'm trading, for some reason, oh my God, my account blows after I had a good week? And the reason is that what you're doing, if it's coupled with bad management, will ultimately be what destroys you. These are solid trades for someone who wants to be in the market and ride out. For somebody who's looking for a big play, we're talking like this, like what we took. This is off the higher frame running its higher frame trend. So if I'm doing this, right, what beat him today was this one. So this was last Friday, right? Nice little trade. He tried to do it again at market opening, and the market just freaking went boop, and it was fast, right? It was faster than he was comfortable with. 2 candles, 2 15-minute candles, and he was out. And then he did it again, and then boop, one more time. So on this chart, I think it was 2 losses, something like that, or 1 win, 2 losses, something along those lines. But the win did not overshadow the losses, and the losses were strong because they were faster than he thought it was going to be. He also has this habit of not putting in a stop loss right away. Again, no excuses on that. That's just, I told him, that's just stupidity, because if anything happens, your account's going to take a bigger hit than you normally manage through. So it's going to take you more days, more patience, more emotion to get through that. Doesn't make any sense. Let me show you another example. So here we go. GCAD. This is another example of him doing the same thing, where the market is tanking and then he real quick takes a buy and then whoop, and then takes a buy and takes a buy, feels great about it, and then whoop. You can't rinse and repeat against the trend. This is you finding that quick bounce. It doesn't mean it's the new trend. The new trend is even a short-term trend of a day or two, right? A simple retracement of a stronger wave, right? The market trying to get to a much better price. These things happen, and when they complete, the higher frame should take over. And I'd rather lose that way than lose in a way where it's like every now and then it worked out for whatever reason, right? You want to trust your targets. You want to trust price. Let me show you another one. Where is it? AUDJPY. That's the other one. When we look at AUDJPY, there were buys inside of AUDJPY, but eventually the market just pop right back down. Takes another one, pop right back down. You have to be way more accurate with your management and your ability to rinse and repeat on against the trend than you are with the trend. With the trend, the market can save you. The market has a better chance of doing the work for you. Against the trend, it doesn't. Now, you may say, well, how was I supposed to know that this was going to go bearish? This is a strong buyer position. When I draw a buyer Fibonacci, this is exactly what should happen, right? Bang. You're looking at a lower frame as you make that assessment, because if I go to a daily chart, that is not the case, right? We had multiple days of bearishness before we even got here. So what you're telling me, even though you might be a disgruntled individual going, no, that's not what I was trying to do there. What you're telling me is you just don't know how to look at a higher frame. Wicks, tails, and shadows is a concept that is inside of your course. It's something that we focus on a lot. It's the idea that if I see a bearish day and then that next day can't even break the previous day, and I see another bearish day and that next day can't break the previous day, and I see the next day and that next day can't break the previous day, it's probably not bullish, right? Just because I go on a lower frame and I can see this, and if I'm on my cell phone, I see this. Hold on. If I'm on my cell phone, I see this, right? Something like that. And I go, wow, look at this bullishness, but I'm about to get caught up in something else that I did not see coming. It's like being too hyper-focused in a business on what happened this week. And just because we had a good week, we feel like every week after this is going to be a good week. There's a system to everything. There's a formula to everything. Your good weeks are going to be rinse and repeated based off of your good habits and what created this good week. If you don't understand what created the good week, there's no way for you to repeat the good week without the luck of the chart. We're not looking for luck. We're looking for you. You are creating the good week. So if we look at what I did last week, what did I do? I stuck to my guns when it came to the bias that I had been doing on these charts for months. And I of course I had to have a pivot because there was a possibility of it turning around and going bullish on some of these assets. But did it? And then after it started dropping, did I start focusing on the opposite side because I could do this? Any asshole out there can draw Fibonacci and go, oh, 61.8. Everyone out there that's been trading for a certain amount of years knows how to do that if they use Fibonacci. Fibonacci trend lines, support and resistance, supply and demand. All you're doing is trying to find pockets of money, of orders. That's all you're doing. These different indicators that show them to you. It's all well and good to know where it is, right? But to use it is a different story. That's why in here I focus so much on the choices that are in front of you and the choices that you are making. That's why we do updates every day. That's why I break down details. That's why I talk to myself sometimes on these updates to remind you that there is a amount of detail, a discernment of the details on the screen, breaking it down, coming to an understanding of what makes the most sense for what you're trying to do here. That's important. You can't just go, oh shit, buyer position, let me buy. You won, and then you think you did well. It's basically you got away with one, right? You got away with it. You were able to get in there real quick, get what you got to get, and then you're out. There's nothing wrong with that. There's everything wrong with trying to work this price as if you're on trend and it's this right here, or this sensitive price, or this when we were up here also back in 2024. There's a massive difference there. Just because there's some buyer orders there, some profit taking there that causes that bounce back up doesn't make it a great trade. Let's look at another one. Gold. Gold is notorious for this, right? So if we look at gold last week, what did I need? I needed the market to grab for liquidity. This is gold play last week. It's kind of like what happened today. These buys are great, but it's starting to look too bearish. So now I need the market to grab for liquidity. I need the market to prove me right. The risk that I'm going to keep up here is going to be so low that if it starts melting, I can drop it. I can drop it without thinking twice, right? I already got my profits. I tried it. It's now done this 4 times. You think it's the smartest thing to continue to try to all out risk this when we know that we've hit some sort of target here and we've been squeezed? Does that make sense? Absolutely not. That is not something that a drawing can show you. That is a choice that you have to come up with. What makes the most sense here? The fact that it's trying to go bearish, so I'm going to give it a chance to do that. But Gustavo, what if it goes higher? We have concepts and tools to catch up with the trend. You should never be in a rush, and you should never think if it's not this trade, it's no trade. That's bullshit. We run trends all the time. Exhibit A. Look at us down here. Look at the amount of red check marks. I do that for a reason, to make it so obvious that the idea that today's the only day is bullshit. It's just you not wanting to do better and make better choices. You can't be great or good or above average in everything if you just react emotionally like everybody else out there. And everything that we do out in the world, The person who does the best is the person with the most skill and the least amount of emotion towards the decision making every single day. Because if you rely on emotions, there are some days you feel great, some days you feel like shit, right? Some months you feel like crap, things happen in your life. And those are the people who inevitably will not do well because they need to feel good and they need to be clear-headed at all times in order to make things go right. But if you have a way where you decipher what it is needs to be done here, which we do it all the time, we just use what's in front of us, the tools that we use. There's very little emotion behind that. It is what it is. So, of course, I want gold to bounce up. Of course, I would like for gold to do this, but it's not giving me the opportunity to do that anymore. And at some point, I have to make a choice. For me, the choice right now is simple. I still like the price. I have partials left over. I'm going to leave it like that, and I'm going to treat it like this, that if the market decides to come back after dropping some, then we'll increase the risk. Other than that, it sits like this. Let me show you a similar example to this right here. This one. This is last week where we ran the buyer Fibonacci. I waited for the liquidity grab. I waited for it to climb back into zone. I waited for the closures, and then boom, we're in there, right? We talked about this. I said this before the liquidity grab even happened and as the liquidity grab was happening. Let's look at Bitcoin. Bitcoin today did something similar, right? It grabbed for liquidity, worked its way back. Now, the risk there is bottom of the barrel because it didn't give me enough time to do anything. But I'm not going to ignore that liquidity grab. I'm not going to ignore that hidden structure. I'm not going to ignore that extension hit. I'm not going to do that. What I'm going to do is start. I'm also not going to go, oh shit, it's going to go bullish, and then just drop all the risk in the world because yes, it would have worked this time. But maybe the next time it doesn't, right? And maybe the next time I get caught up in this 1,800 pip drop with full risk, and now I need the rest of the week to build it back up just to where it was on Monday. We need to understand that, like everything else, the ultimate result is on your shoulders. Losing is part of this. So if you do not have an approach that basically includes the possibility of you losing, that one loss, two losses will destroy you each and every single time. The reason people will have good weeks, good runs, and then ultimately a couple of bad days ruins a good run is because they lack management. They lack self-control. They lack an understanding of why it went well. They lack an understanding of whether the wins were legitimate wins or whether or not they got away with some with bad habits. Sometimes when we're in a one-sided market and I hand that to you and I tell you like this is what we're doing, you will have a great week. And then you'll follow it up like GJ, for example. You'll follow it up with trying to buy, right? When I'm just staying patient because I know this is not the time to get creative. We did our part. Our part was this. All of this was us. All of this down here, this is where we start to assess what makes sense next. Now, I'm not saying you have to mirror me. I don't want that at all. What I'm saying is that in the moments where I'm not doing much, you need to think to yourself, why is he doing that, right? And when you're winning, you need to look at those wins and go, how did I win? And what happened after? Did the market just tank after I was buying, right? Because if you follow it up with more buys the following week, just because you bought during this week and somehow you survived these moments, right? Or you got out quick, then you need to keep doing that and also understand that you were playing with fire, right? You're that guy in Thailand putting your head in the tiger's mouth that they gave the NyQuil to, but maybe that NyQuil eventually will wear out and that tiger's going to rip your fucking face off. In this example, GJ is the tiger. GJ is going to rip your face off when it wakes up and goes, no more buying for any of you, and just continues to drop. Look inside of this drop. There are plenty of moments where it's giving you the feeling like, all right, we're ready. All right, we're ready. Nice little bullshit candle, right? Nice little uptrend, and then bang, right? Nice little support, nice uptrend. If you don't get out, bang, right? Again, this idea like, oh shit, here we go, bang. But you've been trained to look at this and go, no, this isn't real. We're still in the 38. It's just working that level. This isn't real. And then bang, now we've hit a negative 27. So now it makes more sense to at least retrace on this wave and or match the high. Those are the only options there. You can't get too creative. What happens if it goes like this? It's a whatever. It happened. But it doesn't mean that that's going to happen every single time. Again, you do that 10 times, you're not going to get this result. You're going to get this result. You're going to get that result. And that's about it. All right? And if it's meant to get back up here, it's going to happen with time. It's not going to happen one shot. What happens if it happens one shot? There's probably some news that made that happen. There's probably a reason why that happened. Now try to relive that moment over and over, and you're going to have a very tough time doing this. As always, happy trading.